Good afternoon, ladies and gentlemen. In this video, I'm going to go over the complexities behind a 7-second trade that I took on CLA. Now, I think this is a really good stock to go over because it had a really deceptive nature pre-market on the order book and at match as well. And I think a lot of match traders might not appreciate the nature of micro-cap stocks and the fuckery that really goes on in these stocks. So I'm going to cover it and show you guys what I saw and what I did and why I did it. So first things first is pre-market. I put a tweet out about CLA, its relationship to GRE, which really it was just the closest peer comparison that happened recently. And then it was about the infill drilling, which is directly from the announcement. And then saying what could happen pre-market, and really the only opportunity that I saw from this was that it could possibly pop for a maximum of 2 minutes at most and then just flop. And then of course the screen cap of the buy and sell at 2.2 to 2.4, and that was actually a more like a 7 or 8 second trade. So first things first is the announcement itself. 611 meters at 1.39% copper. If you guys have traded copper anytime in the last 12 months, particularly for the low and mid-grade end of town, you'd know that the market just doesn't care. This isn't my opinion, this is just what happens on the market with low to mid-grade copper. For whatever reason, anything under 2% kind of just sucks. Now, 611 meters is an undoubtedly massive hit. So what usually happens is even on low-grade stuff, whether it's gold or whether it's uranium or doesn't matter what the commodity is, even if it's low-grade and you have a monstrous hit of it, it tends to get the market's attention. So let's dig a little deeper into the announcement and why this may have been a little bit shitty to trade. So we scroll down, the first thing we want to make sure is that it's not rock chip or anything like that, and in fact it is drilling. And really it all comes down to the result of the MCB 038 drill hole. This is where that 611 meters comes from. So we scroll down and we want to look at where the drill hit actually is. So here's MCB 038, total depth of 643 meters and the average grade. But we scroll down a little further and we can see that this drill hit at MCB 038 actually goes through 3 different bodies of the ground of known mineralizations. So you can see that really what this drill hole is doing is going through already known intercepts. So these are historical hits. MCB 002, MCB 003, these are all previous drill hits. And we have MCB 038 here, and this is the one section here at 1.9%, which is really nice. But this isn't new information. This is simply doing a drill hole through 3 known ore bodies. And it's all copper, and it feels like a really targeted hit. And I don't think that's necessarily deceptive or anything like that from the part of the company. But in terms of intraday trading, this is a must know, is whether this is a new drill hit, a completely fresh drill hit, or whether it's going an infill drill, so between known drill holes, or whether it's just going through existing bodies of ore. And in this case, that's exactly what's happening. So instantly, this is an intraday red flag. This is not brand new drill hits. And, you go back up, and a lot of people are going to fall for this. A lot of people are going to fall for it because they don't look in depth into the announcement. And really, it's not, for me, it's not worth reading through pages and pages and pages because I got to read multiple announcements every morning. I don't have time to read through a 15 or 17 page document of every announcement of every drill hit. I'm looking for the core bits of information. Firstly, is it actually a fresh drill hit? Secondly, is this rock chips or some sort of garbage? And thirdly, if it's a drill hit, where is it? Is it brand new? Is it through an ore body? Is it an infill drilling? What kind of drilling? How shallow is it? How deep is it? And the other thing that's worth knowing is what angle is the drilling on? If it's just a straight vertical dip, that also has problems in of itself. So what we have really is just the first red flag. And secondly, I want to take you guys to the chart, and I want to show you what the chart looked like pre-market. So this is the daily chart pre-market. And obviously there are 2 standout levels, if not 3, right? We've got a level up here at 3 cents. We've got a level here at 3.6. But really, the more important levels I'm looking at are here at 2.4, and 2.1 is kind of a base. I guess you could look at the bottom end here at around 1.8, but this was already gapping up so much that I didn't really care about the bottom end here. So where are the volumes as well? Well, the volumes, there's a massive volume spike here at this 2.4 candle. So that tells me there's going to be a lot of volume, a lot of supply at this level. And then of course there's a lot of supply here at this level here from 1.5 to 1.3. But that doesn't come into play because the stock actually ends up gapping up at 2.2. So really I don't need to pay attention to these bits of volume. Although it's nice to know that these volumes can act as a bit of resistance. So we've got that much volume that may potentially want to hit out for profit. But really it's this bit of volume that I'm more interested in. So gapping up to 2.2 at this range here with its high volumes. So that's a key aspect of this decision-making process. Next, it's also worth looking at what the market cap is. So it's not just about the charts, it's about understanding peer comparisons. I mentioned GRE previously. That's the closest low-grade copper peer comparison that I have. And of course, they're not like for like. I think CLA is roughly twice as good as GRE, but one can still make some inferences from GRE's price action, its market cap, and all that sort of good stuff. So that is a peer comparison that I think was worth looking at. And what we have is CLA trading at, what is it, roughly 1.4 billion shares on issue. So at 1.4 cents, which was the previous closing price, it was sitting at around 20 million market cap, which for a stock that hits 611 meters of fresh intercepts is super low. That could easily double, but what we're seeing is a drill hit through an existing ore body, not a fresh drill. So really, you know, my mind is instantly red flag. I just want to look for targets to hit out on. 2.4 is a nice target. And at 2.4, we have about 32 to 33 mil market cap. So that is a very substantial move in market cap, given that this drill result or these drillings don't really provide fresh new information. So effectively, my interpretation of this news announcement and its reflection on the market cap is it shouldn't change, right? And it shouldn't change much because there's nothing new in this announcement. It's just a different angle of drilling through known ore bodies. So what we actually end up with is, if we look at the price action, it's probably coming back down to 1.4 in due time. I mean, it doesn't really matter where it goes because I'm trading this intraday, so I don't really care where this goes. I have no interest in this stock or whatsoever anymore. I've already taken my trade. What it does from here, I couldn't care less. So it opened up at 2.2, shot up to 2.5 briefly. I think very little volume went through at 2.5. And I will bring up the maybe the 2-minute chart, something a little less painful to look at. And you can see it pumped, came back, and just failed. And that's it. And eventually it just grinded its way down and into like oblivion. So despite the fact that the announcement sounded amazing, it was actually not that great for intraday trading. So let's take a look at the order book. So keeping all this in mind, let's have a look at the deceptive nature of this order book. I just want you guys to first pay attention to the bids here. For me, I prefer just looking at the numbers here on the left-hand side. That's the number of shares. And on the right side here is the number of shares for sellers. I kind of ignore the dollar values and I don't really look at the histogram that much, but if you guys trade with Spark, then you might appreciate it. So this is at 2 times speed, and it's 1 minute before open. There is undoubtedly a level of strength in the order book. Just look at the level of green versus red. There is undeniably a strength pre-market. But what I want to show you guys is the deceptive nature of what happens on stocks like this. I'm just going to pause it briefly. Take a look at the order book on the sell side. We've got 2 million shares at 2.3, and then practically nothing after that, which for a tape reader or for someone who's a match trader, this looks like the dream scenario. This looks like an instant move from match at 2.2 to shoot up to at least 2.6, and then perhaps carry on a little bit more into the future or throughout the day. You look at the bids here, we've got 4 million, 4 million, 8 million, 5 million, 6 million. You've just got stacks and stacks and stacks of millions of shares queued up on the bid. Like, you actually just can't ask for a better match trade. And this is why a lot of people who trade the match would have got trapped on CLA. So 2.2, we can see what the bids look like. So there's going to be 13 mil executed volume plus a surplus of 5 mil, which is absolutely gorgeous. You know, you're trading, let's say, a 400, 500K parcel, 500,000 shares. That'd be $500 a tick. And you've got a surplus of 5.6 million on the bid behind you. So anyone that puts in, let's say 500K as an example here, 500K at 2.3 will get matched at 2.2, and that you can sell that 500K into this bid wall for zero risk, or effectively zero ticks of risk, I should say, assuming that 5.6 wall doesn't just magically disappear or get sold into all at once. So we're going to take a look. It's more like 4 mil now, and here it is. Stock just opened at 2.2, so it matched here at 2.2. You can see the executed volume here. Look at that bid. That's about 4.1, 4.2 mil left, and then straight away 2.3 gets executed, 2.4, and just look at the nature of the order book here. It looks thin. It looks absolutely dead on the sell side. Now, one thing I want to mention about stocks with greater than 1 billion shares on issue is that this is not normal. It's my opinion and my view that any stock with greater than 1 billion shares becomes a little bit more difficult to trade because the number of shares on issue, there's always going to be sellers. And in this case, there's a shit ton of off-screen sellers. They're just not queued up in the book, right? Why would they? This looks so good on match. You don't want to spook sellers, you don't want to spook buyers by just stacking a sell at 2.3 and just spooking people. You kind of want to let it run. But it's inevitable that this fails for a few reasons. Firstly is just the fundamentals don't make sense for this massive gap up. That's first and foremost. And that it's a bit deceptive because you look at the order book and it looks like the market is agreeing with the position that this should be a big gap up and rally. But what you're going to see is off-screen sellers who seem to know that this really isn't a good news announcement just pile in. So there's the first wipe. There's the first sign of any sellers, and it's at this point that I'm looking for one more push, and it really just happens seconds later, and just selling into 2.4 here as quickly as possible, and that's the trade. And you can see from here on, it just gets worse and worse on the sell side. Now, I haven't got the order book for the whole day, but you can see what happens. Look at the bids just disappearing, and the stock just absolutely gets mauled. So that's the sort of deceptive nature of the trade of the stock. And that's the sort of decision making that's taking place. So for me, I knew 2.2 or even 2.4 was an overvalued price tag for this stock based on the news announcement. But there was an opportunity there based purely on the order book and the momentum that I was relying on other people who are buying into the stock to not have this knowledge, right? They just didn't have the knowledge that the stock was super overvalued. They might not have had the knowledge that the drill results were in fact basically drilling through existing ore bodies. They may not have known that the shares on issue was 1.4 billion. They may not have known what the market cap was because they're just simply trading the order book. So there's a level of complexity there. There's a lot of information there that I think a lot of people didn't take into consideration. And this is what you end up with. You end up with a monstrous match trade. And imagine how many people here are trapped in the stock, right? That's 31 million shares. And then there's little opportunity to break out or break even. There's 8 million here at the next level, and then it just collapses. So now what you're left with is an absolute bucket ton of traders or investors stuck here with a huge amount of volume because they just don't know any better. They don't understand the microcap world. So that's the sort of complexity and level of decision making that went into this trade. And if you guys found this useful at all, please do consider hitting that like and subscribe button. I'd appreciate that a lot. Otherwise, guys, I'll catch you in the next one. Cheers.